Hi everyone, you asked for it, you got it. 5 of the best stocks to invest in for 2023. I know I did a video earlier this year highlighting 23 of the best stocks to buy for 2023. Some of you emailed me asking for the top 5 out of those top 23. So these are the 5 I've picked out of my top 23 stocks for 2023. I'll link to that video in case you want a bigger list, but let's get into this list here. Starting with the Walt Disney Company. The company was devastated during the earlier stages of the pandemic and is now recovering and is stronger than ever before. Operating margins in its theme park segments have surpassed the level before the outbreak, and the theme parks are not yet back at full strength. The stock is trading at a forward PE ratio of 20.8, the lowest it has been going back to January of 2022, and a relatively low valuation for a company that has excellent prospects over the next several years as consumers unleash this pent-up demand to get out of the house to experience things away from home. Sticking with that away from home experience theme, I have Airbnb, my second of the 5 best stocks to buy in 2023. And in fact, I did a video saying that Airbnb is my top stock to buy for 2023. And it's because of the same reason I mentioned for Disney, is that consumers are unleashing this pent up demand to get out of the house, to go away from home. And Airbnb is benefiting from that trend. Its net profits is higher than it's ever been. Its revenue is higher than it's ever been. Meanwhile, overall worldwide consumer spending on travel is still 500 billion below the level it was before the outbreak, which is nearly 1/3 below where it was before the outbreak. So there's still a lot of room for travel spending to recover. Airbnb is going to benefit from that tailwind for the next several quarters to perhaps the next several years. The stock is trading at a forward PE ratio of 26.99. Again, the cheapest that it's been since January. So this is my favorite stock to buy in 2023 and one of the 5 best stocks to buy in 2023. The next one is Alphabet, the advertising giant home to Google and YouTube, two of the more dominant consumer platforms worldwide. By offering these products for free, Alphabet was able to generate over $250 billion in revenue in 2021. It's a remarkably strong business, trading at a forward PE ratio of 18.61. Again, the lowest that it's been since January. And I will admit that ad revenue, ad spending will continue to be under pressure for at least the first couple of quarters in 2023. Still, over the longer run, ad spending is a nearly $800 billion industry in which Alphabet is arguably the most dominant player. And in the long run, businesses are not going to stop advertising. They're always going to want to try to get you to buy their products and services instead of buying their competitors' products and services. And Alphabet is an excellent way for businesses to reach consumers that are looking to buy something. The next one is Meta Platforms. Again, in the advertising industry that I mentioned was at nearly $800 billion. Meta Platforms boasts nearly half of the people on the planet are monthly active users of at least one of Meta Platforms apps. The company faced a lot of headwinds in 2022, including privacy changes from Apple and rising competition from TikTok. But in my opinion, the stock overreacted to those headwinds and is now trading at a forward PE ratio of 13.29, near the lowest it has been all year, and relatively inexpensive and cheap for a company like Meta Platforms that's been able to deliver so excellent top line revenue growth and excellent operating profit margins. You're arguably not going to get an opportunity to buy a stock like this at these valuations anytime again other than right now, because it's facing these headwinds and investors have overreacted to these headwinds. Finally, Palo Alto Networks is my fifth stock to buy in 2023 on my list. It's trading at a little bit more expensive PE ratio of 41, but it's cheaper. It's the cheapest that it's been going back to January of 2022. It's in the field of cybersecurity and cyber defense, and this is going to be a growing industry for 5, 10, 20 years, in my opinion, as the need to protect consumers' data and privacy and security is just going to continue to grow as we continue to spend more time online on the computer. Palo Alto Networks is one of the leaders in the space, and it's going to continue to benefit from this tailwind. All right, there you have it. My 5 best stocks to buy for 2023. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.